The US dollar has lost more than 90% of its value over the last century. In 1910, a single dollar could buy you 30 chocolate bars. In 1940, it got you 20 bottles of Coca-Cola. By 1970, that same dollar was still enough for 17 oranges. But today, a single dollar wouldn't even buy you a small coffee at McDonald's. You might see your bank balance climb, but what you don't realize is that inflation is silently eroding your money's true value. In this video, I'll reveal the 5 assets that can not only protect your wealth but actually help it flourish, a strategy quietly embraced by the financially savvy and the ultra-rich. What if the key to true financial freedom isn't in saving more, but in unlocking assets that defy time and inflation? Let's begin by exploring an asset class that has consistently defied the odds, a collection of timeless treasures in an ever-changing economy. Your money in the bank is gradually losing value as governments keep printing money, but precious metals retain their purchasing power. In the 1950s, metals like gold, silver, and platinum were much more affordable. Over the decades, their values have surged dramatically. Gold, for instance, has risen from around $400 per ounce to nearly $3,000 per ounce in early 2025, while silver and platinum have experienced similarly impressive upward trends. This isn't about personal what-ifs or missed opportunities. It's a clear demonstration that these assets have an enduring value that outlasts the ebb and flow of fiat currencies. Doesn't this stark increase make you question where true lasting value lies? Every time we witness more money entering circulation, it's a stark reminder that cash, even if your bank balance seems to grow, gradually loses its power. The numbers may go up, but inflation quietly chips away at the real purchasing power of every dollar. Think about it. While your salary might increase, your ability to buy goods and services doesn't always keep pace. What would it mean for your future if you could harness the power of assets that not only preserve value but actually grow over time? This isn't mere speculation. Historically, during times of economic uncertainty or currency devaluation, precious metals have served as safe havens. They are tangible, finite resources that governments can simply print more of. The intrinsic value of gold, silver, and platinum stems from their rarity, durability, and universal demand, making them reliable stores of wealth in turbulent times. How does knowing this historical resilience change the way you think about investing in tangible assets? Precious metals are a powerful shield for your wealth, but there's another secret the ultra-rich rely on: safe haven currencies. Did you know that the ultra-rich keep a secret stash that goes far beyond just US dollars? I was astonished to learn that currencies like the Swiss franc have long been revered as safe havens. Why? Because Switzerland is known for its robust economy, disciplined fiscal policies, and one of the strongest banking systems in the world. During both the 2008 financial crisis and again in 2022, the Swiss franc not only outperformed the US dollar, but also maintained its stability when many other currencies wavered. Isn't it intriguing that a stable currency can be as powerful as any precious metal when it comes to preserving value? But it doesn't stop there. Many wealthy investors also include the British pound and even the Chinese yuan in their portfolios. These currencies benefit from strong governmental policies, political stability, and deep, liquid financial markets. The idea is simple: diversify your holdings not just across asset classes, but across different forms of money that have historically weathered economic storms. How might your financial strategy change if you rebalanced your portfolio to include these stable, historically resilient currencies? By considering safe haven currencies, you're not only protecting your wealth from domestic economic uncertainties, but you're also tapping into the global market's inherent stability. When national economies falter or political turmoil causes market jitters, these currencies often remain steady. They provide an alternative path to preserving purchasing power that many traditional investors overlook. There's another pillar of future wealth that's powering the modern economy: industrial commodities. Ever thought about what the backbone of modern technology might cost you in the future? It's astounding to realize that everyday gadgets, from the smartphones in our pockets to the electric vehicles transforming our roads, are built on industrial commodities. Take lithium, for example. Over the past decade, the demand for lithium has soared as electric vehicles and renewable energy storage systems have exploded onto the scene. This isn't just an isolated statistic. It reflects a seismic shift in the global economy driven by the renewable energy revolution and the rapid expansion of tech manufacturing. Doesn't this surge make you wonder how many opportunities lie hidden in the raw materials behind modern tech? And it's not only lithium. Silver, traditionally seen as a precious metal, also plays a vital role in electronics, medical devices, and even nuclear reactors. The dual nature of silver, as both an industrial and precious metal, illustrates its multifaceted importance in our modern lives. As technology continues to evolve, the demand for these industrial commodities is expected to increase even further. What new possibilities might emerge if you position yourself at the intersection of technology and commodity investment? Investing in industrial commodities means tapping into the future of innovation. These materials are the unsung heroes behind many of today's most exciting technological advances. By diversifying into this asset class, you're not only hedging against inflation, but also positioning yourself to benefit from the continued growth of the global technology and infrastructure projects. Let's turn our attention to a more tangible, enduring asset: land and real estate. Have you ever dreamed of turning property into a lifelong asset that not only appreciates in value, but also generates ongoing income? Land is an asset of permanence. For example, housing prices have tripled between 1992 and 2020, even weathering the shocks of the 2008 crash. This resilience speaks volumes about the enduring power of real estate as a store of wealth, something that isn't easily swayed by short-term market fluctuations. Doesn't the idea of owning a piece of land that grows in value naturally appeal to you? Imagine owning a rental property where the monthly income not only covers your expenses, but also gradually pays down your mortgage. Over time, you build equity while enjoying a steady passive income stream. The beauty of real estate is its dual nature. It's both an appreciating asset and a reliable source of cash flow. And here's the best part: you don't need millions to get started. With investment vehicles like REITs, you can tap into the real estate market with relatively modest capital. What would it mean for you to have an investment that works as hard as you do? Real estate isn't just about owning property, it's about securing a future where your assets continuously build wealth. It represents a tangible, physical investment that can provide stability and growth for generations. Let's shift our focus to one of the safest investments available: sovereign guarantees. Would you trust your hard-earned money to anything less than the safest investment available? I've always taken comfort in the reliability of US Treasury bonds, especially during times of uncertainty. When markets become unpredictable, these bonds have consistently served as beacons of stability. They're a cornerstone of many portfolios because, unlike stocks or commodities, they offer a predictable stream of income and minimal risk. In simple terms, bonds allow you to lend money to governments or companies in exchange for regular interest payments and the return of your principal investment at maturity. They work on the principle that, in exchange for lending you money, you receive periodic income. This makes bonds a critical component of a diversified investment strategy, especially during periods of economic downturn. There are several ways to invest in sovereign guarantees. You can opt for treasury bills if you prefer short-term safety, T-bonds for a longer yield, or diversified bond ETFs like TLT or AGG, which combine multiple bonds to spread risk. Each option provides a different balance of risk and return. Could integrating bonds into your portfolio be the anchor you need in turbulent times? In a world where every printed dollar erodes the value of your cash, these government-backed assets offer a protective cushion. Their reliability has earned the trust of legendary investors like Warren Buffett, who consistently emphasize the importance of balancing risk with stability. Embrace these strategies and start building your financial future today. Don't forget to subscribe and share your thoughts below.